bos kami dah beli. Dia tak kasih buat aktiviti kat sini tau.
Apa pun tak.
Cik!
Cik, bye! Sekarang ni tempat bisnes aku. Bukan tempat untuk kamu semua main-main. Faham? Aku dengar kamu orang tak letak dokumen yang lengkap. Tak tahu tak dari mana. Kalau mau belajar, kamu pergi cari tempat lain. Diamlah. Jangan buat bising. Customer aku sudah komplain.
Saya faham Cikgu Siti. Tapi budak ni tak ada sijil lahir, tak ada dokumen.
Tak bagi budak-budak ni pergi sekolah kan? Tak apa. Biar aku je yang dekatkan sekolah dengan diorang.
Boleh tak saya tukar apple ni dengan buku tu?
Yang ni? Boleh je. Nah. Tak apa, awak simpan je apple tu, okey?
Betul ke?
Betul.
Terima kasih, Kak.
Okay, so A untuk?
Apple.
B untuk?
Ball.
C untuk?
Cat.
Walaupun dia tak ada dokumen, Cik, dia tetap ada masa depan.
Peraturan tetap peraturan.
Kalau dah tak ada jalan lain, Cik, memang masa depan budak-budak ni tertutup selamanya, Cik. Budak-budak ni tak minta kemewahan. Diorang cuma minta peluang. Kalau maksud sebenar raya adalah untuk buka pintu dan hati, inilah masanya tuan-tuan dan puan-puan. Untuk kita buka pintu untuk mereka ni semua.
Bos, stok kita terbakar sebab ada orang buang rokok. Kita kena cari tempat lain.
Mr. Lim, saya nak jemput awak ke rumah terbuka hari raya nanti.
Bukankah itu maksud sebenar raya?
Pergi! Pergi!
Dulu aku fikir sekolah untuk yang ada. Cikgu ajar ilmu untuk semua. Walau datang tanpa nama, di sini kami semua diterima.
Haji, bye-bye, bye-bye. Tempat ini tempat ini nama orang pakai je. Tapi jangan bising sangat.
Cikgu, okey? Ilmu yang kita ada, kita kena kongsikan dengan semua.
Tahun depan boleh tak saya ajar budak baru?
Boleh.
Terima kasih, cikgu.
my kids in chocolate to become the future leader. They can be proud of themselves telling that I'm the street children that came out from the Bujang chocolate. And I'm here to change humanity. I'm here to change how people live. Okay, done.
Hi, good morning. Welcome to Morning Kappa. Here we come to the week 4 of March with your futures. Before we begin, I would like to highlight a brief disclaimer. Trading in futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and informational purposes only and does not consist an invitation or recommendation to buy or sell any financial instruments. Please consult your licensed broker or financial advisor before making any trading decision. The overall market profile has shifted significantly this week. Some boards now show a clear direction moving out of neutral phases and into confirmed positive or negative trends. Last week, our major precious metal, including gold, silver, and copper, underwent the most dramatic changes. These products have shifted from neutral to negative, and this breakdown marks a critical turning point for the sector. While the overall trend for US market remained neutral, the Asian market have shifted to negative. We are no longer seeing sideways movement. These are now confirmed negative trend driven by persistent high inflation. The energy and agriculture sector continue to be where we find our most consistent strength. Crude oil remained our strongest green board, maintaining a positive status for 2 consecutive weeks and a solid positive overall trend. Soybean oil and crude palm oil, both current trend, remain neutral. Corn and soybean, we expect these to lose momentum and slip into the neutral region this week. Natural gas has shown some weakness, moving from neutral to negative. As for gold, is on our radar. The Friday crash, a liquidity crisis, and the Monday rebound, the Trump pivot. On Friday, gold suffered its worst daily decline in 40 years, plunging roughly 10.5%, and it slipped to 4,100. Gold didn't drop because it lost its value. It dropped because it was the only thing trader could sell to stay solvent during the stock market crash. Over the weekend and into Monday morning, President Trump posted that the US would postpone planned strike on Iranian energy and power infrastructure for 5 days to allow for constructive conversations. Gold is now moving at the bottom of downwards channel, and the price may consolidate within 4,300 to 4,430 until a breakout. The second product that's on our radar is WTI crude oil. After a massive 10% plunge, oil prices have rebounded yesterday. The initial crash was triggered by a social media post from President Trump ordering a 5 days postponement of strike on Iranian power plant, following productive talks. However, prices surged back today, with Brent climbing to 102 and WTI to 90.62 after Tehran officially denied that any such negotiation were taking place, calling the claim psychological operational. The market is currently in a headline-driven phase, while the long-term trend remains positive due to supply shortage. The short-term trading profile is neutral. 92.2 is now the price to critical price to watch. Any failure to support above this price will cause market to test the 80 level, and a firm support above 92.2 will cause the market to move higher, testing the 100 level again. The S&P 500 is testing the key support level of 6569 and is moving in the same direction as gold. Both the S&P 500 and Nasdaq are under pressure. Stock fell on Friday as concern over a potential petro-yen system threatened the US dollar global dominance, a shift that typically results in higher borrowing costs and a greater uncertainty for American companies. Consequently, prices hit the key support level before rebounding, supported by reports of productive conversation between US and Iran. There is also a potential formation of an inverted cup and handle pattern, which may indicate short-term bullish momentum ahead, expecting range within 6770 to 6569. Before we look ahead, let's audit last week. We had one position with floating profit and a disciplined loss. The first one will be on soybean oil. We entered position yesterday at 64.6, looking at potential target at 68.45 and potential loss price at 63. The second product that we called last week was Micro Nikkei. We triggered a stop loss at 52.700 and caused a potential loss of USD 440. As usual, the highlight of our briefing, the future market call, building on last week's momentum, we are anticipating a negative short-term chart setup for FKLI April month. The initial investment is 5,000. Reference entry price is 1716.5. Potential profit is 1698, targeting a gain of 925. Potential stop loss above 1725, capping the potential loss at 425. The risk and reward ratio for this trade is 1:2. The second call that we're going to call is for Micro S&P 500. We anticipate a positive short-term chart setup for Micro S&P June contract. The initial investment is USD 2,674. Reference entry price is 6606. Potential profit price is 6770, targeting a gain of 820. Potential stop loss below 6560, capping potential loss at USD 230. This trade, the risk and reward ratio is 1:3.5. The third product we are calling for is on Micro Bitcoin. We anticipate a positive short-term chart for Micro Bitcoin. The initial investment is USD 1,865. And the reference entry price is 69,620. Potential profit price is 74,600, targeting a gain of USD 498. A potential stop loss below 68,400, capping the potential loss at USD 122. The risk and reward ratio is 1:4. If you like what we are sharing, we discussed today, has sparked your interest, there has never been a better time to start. We are currently rewarding new traders through our Trade with Passion 2.0 campaign, where you will enjoy zero brokerage fee if you begin trading within the first 30 days. At RHB, we believe in the double bonus experience. Beyond the fee waiver, every trade you trade, we automatically qualify you for our Trade and Win campaign, giving you multiple chances to win a Tesla. We truly reward our trader more than you can imagine. To get started, please reach out to us directly or drop us an inquiry through the RHB TradeSmart website, and our team will be in touch with you. That's all I have to share today. Thank you for your time, and I will hand over to the next speaker.
All right. Morning, everyone. Thank you, Meagan, for the midweek futures update. So looking at the Hang Seng Next, it managed to bounce off this 2,400 point level. But we still keep a bearish bias on the Hang Seng with the stop loss point at 26,600 point level. And as of this morning, right, we do see that there is a positive setup for a BYD 1211. The counter have a jump above 105 Hong Kong dollars. The next R1 will be 110 and followed by 115. Downside support will be 100 Hong Kong dollar. Secondly, we have the Tingyi Cayman Island 322, which in Mandarin is called Kang Shifu. It has climbed above 13 Hong Kong dollar, heading towards 14 and followed by 15. Downside support is 12.30, right? And I think one thing about what the market is looking at, apart from the Iran war, is what's the directions of the US interest rate, right? As we know that in US interest rate benchmark for the world central bank interest rate policy, right? So after the US have incurred so much expenses in the war, right? How this is going to impact their balance sheets, and how are they going to pay off their this debt with the tariff being ruled unconstitutional by the court, right? To find out more about this macro development, right? We have an interview with Barnabas, our chief economist, this afternoon at 1 p.m. So do log in our this event, which we're going to live stream through Zoom as well as Facebook today at 1 p.m. And looking at the Malaysia market, right? FKLI, we still keep a bullish bias despite that yesterday there was a corrections. Now the market have a pullback yesterday to play a catch down on the regional market, right? As we know, regional market Monday was down. That's why yesterday we're down, but regional market rebound, right? So I think that's actually quite normal. But what we do need to watch out is whether FKLI or FPM TLCI can sustain above a 1680 point support level. And then on for FCPO, there was only a mild correction. Initially, we thought it's going to be a sharp correction, but the sentiment remains positive so far, and we keep our support at 4210. So far we stay bullish bias on the FCPO, and so you can see that Bloomberg right now also talking about the interest rate directions instead of the Iran war. I think the war is going to pause for some time, right, until more information that we're going to see on the weekend or over the week, right? What's important is that where is the interest rate going to, right? And so this is Barnabas. We're going to have a 1 p.m. A live interview with him. Right, so Malaysia trading stocks. Firstly, we look at the oil-related dialogue. Break past 2 ringgit 5 cents. Next R1 will be 220 and followed by 2 ringgit and 35. That's the support 1 ringgit 90. Then on Westports, break past 33 cents resistance. Next R1 is 35 and followed by 37. That's the support is 31 cent and half. Okay. So we have two breakout stock, dialogue and Westports. So I'll stop here and I'll pass on to Eddy. Thank you.
Thank you, Joseph. Let me proceed with a sector update on the healthcare sector. We are maintaining our overweight on the sector. Top picks here, we have KPJ. We have also added LAC Med as well as Duo Pharma. So the sector continues to serve as a robust defensive shelter amid the heightened global geopolitical volatility as well as the inflationary pressures coming from that. While sector valuations appear stretched relative to historical means, we view this as a fundamental structural re-rating for the Malaysia healthcare assets, evidenced by the widening valuation gap between domestic focused players as well as regional peers. So in terms of fourth quarter results, so there's a solid end to fourth quarter 25. There were two companies that beat expectations, mainly KPJ and Duo Pharma, and LAC Med as well as IHH were reported results in line with expectations. And during the reporting season, we downgraded IHH to a neutral with a target price of 9 ringgit and 41 cents. right? Earnings revision across the sector were generally positive. But in this report alone, we have revised our target price for KPJ upwards to 379 cents from 337 cents previously, in which we penciled in stronger revenue intensity growth as well as a slightly lower tax rate. Meanwhile, for this healthcare sector, the core thesis here remains unchanged. A pivotal change in this quarter is the deliberate widening of valuation premium over IHH. After recalibrating our target prices, the implied valuations for KPJ is currently at 18.6 times EV/EBITDA, while for IHH is at 16.4 times, and that represents a 13.4% premium gap. We believe this premium is justified by KPJ's stronger domestic resilience amid the geopolitical driven inflation pressures that we have mentioned, as well as the group actually returns higher ROE and group level EBITDA margins relative to IHH. At current juncture, KPJ does operate at a lower revenue intensity, in which we see significant opportunity to untap as its center of excellence roadmap matures over time. So in terms of our pick, again, KPJ is our sector top pick. Three structural tailwinds that anchors this pick. Number one is its relatively smaller exposure to medical tourism. So in a way, it actually makes it a more pure play defensive refuge within Malaysia. And they also benefit from any increase in international patient flow, given that it will provide a larger incremental boost to its smaller base. Number two is that amongst the larger listed healthcare services provider, we do see KPJ secondary care hospitals as a primary beneficiary of the upcoming MHIT spillover. We do think that the standardization of base plan coverage bodes quite well with KPJ's secondary network, which can absorb volumes from the price-sensitive M40 segment while still limiting exposure to potential insurance-driven down trading. This is our view. Number three, it's KPJ's Center of Excellence uplift plans that actually provides higher revenue, higher visibility in terms of revenue intensity growth, ensuring that the group actually move towards high complexity as well as high margin care. So beyond KPJ and beyond the hospital space, again, we have added Duo Pharma with a target price of 165 cents and LAC Medical, like Matt, with a target price of 114 cents into our top picks. We have earlier initiated LAC Med in January, and we continue to view the group as a key beneficiary of the ongoing CapEx cycle in the Malaysia healthcare infra space, with supported by the growing recurring income modes. Meanwhile, for Duo Pharma, we see the company entering into 2026 on a stronger footing following the robust fourth quarter of 2025. And key downside risks to our sector overweight includes higher than expected operating costs, lower than expected patient visits and revenue intensity growth, as well as adverse regulatory changes. And in terms of FX, should the USD weaken meaningfully, IHH may face adverse FX translation effects on overseas earnings, while for Duo Pharma, they could continue to benefit from the cost relief of imported active pharmaceutical ingredients. And we are maintaining our overweight, again, topics KPJ, LAC Med, as well as Duo Pharma. That's all from me. I'll pass on to John. Thank you.
Hi, thank you, Eddy, and morning, everyone. Let me continue with a company update report for Westport following our meeting with the management last week. So Westport direct exposure to the Middle East conflict is minimal, given that only about 5% of their container volume is exposed to the Middle East, despite their Asia-Europe route accounting for about 16% of their overall throughput. So the management has confirmed that all the aid services calling from the Middle East remain active. And notably, some of the shipping liners are diverting their cargo at alternative hubs like Westport due to the limitation in the Strait of Hormuz. However, Westport priority now is to keep the port uncongested. Hence, they are refusing boxes with unclear final destination, keeping the yard density at a healthy range of 70 to 80 level to avoid congestion. Meanwhile, there are 2 new warehouses commencing in April and June, which will provide an additional 500,000 TEUs per annum. And in terms of the rising fuel costs, again, based on our sensitivity test, every 10% increase in the fuel cost could impact the earnings by about 1%. Although the duration of the conflict will ultimately dictate the severity of this impact. Hence, we believe the current environment presents an appropriate window for the government to establish a price mitigation mechanism to cushion this cost. And last but not least, the Suez Canal reopening is likely shelved. Remember that the shipping liners have been gradually returning to selected east-west services to Suez Canal transit in recent months after previously deterring around the Cape of Good Hope since late 2023 due to the Houthi military attacks. And these plans, are now expected to be shelved because of the ongoing conflict in the Middle East, which could lend a support to a higher freight rate. And in terms of the risk, a prolonged regional conflict could drag the global demand, leading to a slower than expected container growth. Remember that Westport container growth is closely tied to Malaysia GDP with a positive correlation of 0.89. While RHB economics maintain a 1.8% inflation forecast for 2026, an escalating conflict may drive the crude oil prices higher, potentially fueling inflationary pressure. Hence, the long-term outlook remains contingent on the duration of the energy price hike and its subsequent effect on the global trade volumes. All in, we maintain our earnings and TP forecast given that Westport remains largely insulated from the Middle East conflict. Our TP of 6 ringgit 89 cents implies a target PE of 18 times with a 2% ESG premium imputed. I'll stop here and pass the floor to the next speaker. Well, if there's no more speaker for today, I think that's all from our side today. Happy trading and see you again tomorrow at Morning Kappa.